Hey, good morning, traders. This is Blake Morrow, and you're listening to the FACE webinar. A couple of you guys already asked, where's Dale? He actually had an appointment today he had to attend to, so he'll be back tomorrow. It's just one of those. He had reached out yesterday afternoon, and he had asked like, "Oh, hey, I got this thing coming up. Can you cover for me tomorrow?" And I'm like, "Oh yeah." And then I totally forgot about it until about 5 minutes ago. So here I am, and here are you. Can you guys hear me? Okay. Use the chat box to let
Loud,
me.
loud and clear, Blake. Good morning,
Okay,
loud and
good,
clear.
good. All right, everybody can hear me. Okay, good. All right, that's fine. I totally forgot that I was covering for Dale. So here, this is this is me covering for Dale. It's been a while since I've actually hosted a webinar, if you will. But the good news is we've had some activity from yesterday. So let's we're gonna get into some of the stuff that happened yesterday, and let's talk about the markets now. First and foremost, if you guys are wondering what happened overnight, the S&P came off. China news was announced by Bloomberg that let's see, the news was basically that the uh, phase one, China is said to doubt long-term trade deal with Trump, and that was an S&P headline or a Bloomberg headline last night, and that happened around, I guess, midnight my time. So that would have been 3 o'clock in the morning, I guess, Eastern, and that's what took the S&Ps lower. And you saw the S&Ps drop, you saw the Aussie drop as a result. And really the dollar yen got absolutely smoked, and the dollar yen, big failure yesterday. And I'm gonna read you guys something because Paul Franco ceases to amaze me. And if you guys don't know who Paul is, Paul Franco is on our team, obviously. His handle is SPZ Trader. You can see him right here, Paul Franco. Okay, if you want to follow him on Twitter, that's Paulie. I've known Paulie for years. He's been with us he's been with us for the last couple of years, but I had him join the Wise Trade team like years ago, and I loved him because he tells you how it is, like it is he doesn't BS around, and he knows his level so well, and he's always traded for a living, and then that's just how he's made his money. And on top of that, he takes care of one of his family members, which is just really really cool. Anyway, um uh he yesterday he does the Asian analysis a lot of times. So the Asian analysis from 2 days ago, so the dollar yen got past resistance at it's 108.88, just above 109. Major resistance, the pivot remains at 109.27. And if you guys saw the high in the dollar yen yesterday, it was 109.28 and a half, I think. 109, let's see that. What's the high price? Right. 109.286. He was off by 1.6 pips. And it's interesting because I was looking at the 200-day moving average and just really focused more on that. He was focused on that, that resistance level pivot, and then it just absolutely imploded yesterday after the Fed. And now here the dollar yen is down here, and you got to be a little careful with the dollar yen, especially if you're shorting down here. The reason why I say that is because we just broke through some support. These markets are very uh, they're well known at current levels and current prices and current time to take out support and reverse, so, or vice versa if you're talking about resistance and reversing. So be a little careful on the short side of the US dollar Japanese yen. And one of the reasons why I mention that is because Bloomberg headlines on China are notoriously bearish. Why is that? I mean, personally, If I had to give you a reason, I think Michael Bloomberg has a real big issue with Donald Trump, and I know it's a big conspiracy theory, but I think that their news stories tend to be a little bit more slanted towards a bearish slant, and they tend to release them when no one's looking, and um, uh, no one's looking, and to get maximum exposure, and that's what happened overnight. So what I'm going to say is just be really careful chasing it down here. Now, the other thing that we have to contend with is it's Halloween. So happy Halloween, everybody. It's Halloween, but it's also the end of the month. And because it's the end of the month, the preliminary reports that I've been reading, I shared one from Citigroup with the our Forex Analytics chat room today. If you guys are Forex Analytics subscribers, you can go over here to the chat room and just click on this link right here. It brings up the chat room. I'm already logged in, so I can't do that. But I shared some of the preliminary stuff from Citigroup. They're looking for some dollar selling and cable euro buying predominantly, and I think you're seeing some of that pound buying come through the market already. We do have a bull flag pattern both in the pound and in the euro dollar. Now, I, I want to mention that I doubt that we're going to get a break out of the US dollar, or in other words, a break out of the euro, breakdown of the US dollar, if that's the way you're trading, because that's the way I'm trading. I'm long euros, but I doubt we're going to get any type of move, significant move, ahead of tomorrow's NFP, even with the end of month buying or selling. The euro, in my opinion, what we're doing here is let me just pull this out a little bit. What I think we're doing here is we're wedging into tomorrow's number. Now, will the euro break out? I think it will. I think the price action is really bullish for the euro, but we have to, in order for that to happen, we have to have a bad NFP. And if you guys look at ADP numbers this month, I mean they're still showing. I mean they actually beat expectations, and most of the metrics that you can look at are suggesting that we might see some tapering off of jobs, but it's been a mild tapering off over the course of the last few months. We've gone from creating 200,000 jobs to creating 100,000 jobs, and if we had this conversation every month at the same time, I'm going to give you the same story, that we're at full employment, and that you're seeing employment just shrink a little as a result, and that's exactly what's happening. I mean, the market's expecting 100,000 jobs tomorrow, maybe 90,000. If I look at, it's here, this is Bloomberg, so you can just let's go into tomorrow. Bloomberg's looking for 85,000. Where did that number go? There it is, right here. Bloomberg at this point is looking for 85,000. So you're seeing that gradual taper off of jobs, and that, like I said, has been expected. We've been thinking that that's going to be the case. The question is, do we get an outsized move? And based on uh, the PMIs and the employment indexes inside of those and the ADP numbers, I wouldn't bet on the fact that we're going to get some outsized number, like we only create 20,000 jobs, or maybe that we lost jobs this month. If we do, the dollar is going to get absolutely destroyed tomorrow. It will. I'm just telling you guys, if there's some sort of, like I said, if we create 20,000 jobs, unemployment rate goes up, or there's a negative job growth next month, or this from last month, which isn't going to be the case. But I'm just saying, if there was, and for some reason I totally misread that, the dollar is going to get destroyed. I don't think that's going to be the case. I think the dollar, we're probably going to be, we're going to create 100,000 jobs, or create 80,000 jobs, somewhere within, a tight band of expectations. And whether we get a dollar move after that is to be seen. It's kind of like yesterday. Everybody expected a hawkish cut from the Fed. We got a hawkish cut from the Fed. What happened? Well, the dollar strengthened initially, Everybody's like hawkish cut, let's short the euro, and then it reversed hard. Tomorrow we could get an inline number. We create 90,000 jobs. Market goes woohoo. You see the euro dollar slip, and then it might reverse after that. I think the euro is trying to build longer term a cyclical base here, and so I do think it's just a matter of time before the euro breaks higher. The 200-day is obviously coming into focus, and that's going to be at 112. So 112 is going to be key tomorrow. We'll talk about that again tomorrow, see where we end up today. But I doubt, like I'm going to say again, I doubt the dollar is going to break down between now and tomorrow morning, 24 hours from right now, or 24 hours and 20 minutes. I doubt we're going to see it. So if the euro gets up towards 111.80, it's probably a decent short, and if it gets down towards 111.30, it's probably a decent buy. I think realistically, and I'm just trying to be realistic with you guys here for expectations. Oh, that's not what I wanted. I think you can probably trade this range for today. You know, if you're like, crap, man, I missed the euro buy yesterday. Well, you might be able to buy it at like 111.30, and then if you're like, well, I really want to short the euro because the euro is a piece of garbage, and I think the euro is going to hell in a handbasket. Hey, if that's your opinion, that's your opinion. You're entitled to your opinion. I don't know if I'd sell the euro here. I'd probably sell it up here and then look for a short up at these highs. So if again if I had to give you some options for today, that's what I would be thinking. Also, I think the euro is going to trade a little heavier today. What's another reason why? I'm gonna ask you guys. Why do you think I'd think that the euro might trade a little heavier today? Any ideas? You guys can go in the chat box and make a response to me or type a response if you want to. What do you guys think that the euro could be heavier? Any other reason? Forex Gal says because of Christine Lagarde. That's always a good reason, right? Options expiration. Joe said option. Well, that wasn't what I was thinking, but we have most of the options are expiring at 111.50. Hold on. Let me see here. No. Where my is that today? No. Option where options traders? No. Where the hell did my I had all the options expirations. Crap. Here, I'll do this here just so you guys can see it. I took a picture and gave it to the traders in our chat room. Let me just find it for you. Okay, here it is. So we have we have a lot expiring around the 111.50, 112, a billion there. This is for today. 538 million down at 111. I doubt the market's going to try to reach for those. 111.50, 112 seems logical. But so we might, hang around this 111.50, waiting for the cut. But one of the reasons why I think actually the euro could trade heavy, just to answer your question. And by the way, Rick can call. I know, and thank you guys all for answering. The euro pound. Euro pound's trading heavy today. We're trading, below or right at triangle support. Cable looks like it wants to break out. Now, is the cable going to break out? I don't know if the cable is going to break out, but I'm going to tell you this much: if we break 130, it's going to squeeze the Scheistermeisters out of some shorts, right? Even if you don't believe in Brexit and you're like, oh, no, there's no way in hell the pound's going higher. Look, we have a bull flag pattern and it's bullish, and we're avoiding a no deal Brexit right now, as far as right now goes. So coast is clear. Anybody who shorts going, oh crap, I was really positioned for a no deal Brexit, and here we go. We're not going to get one more than likely. So I got to start covering these up. I'm going to tell you right now that if there's stops above this 130, I mean, there's got to be a truck ton of stops that people that are like shorting these highs, they're like, yeah, that's not going to happen. Boris Johnson's a big sham and blah, 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 whatever. their stops are all right here. We get above 130 and it's going to trade aggressively higher. I would assume that, and I'm talking a day that we don't have anything going on. We could really like go to 130, 130 50, 130 60. We could spike up just a whack a mole, all those stops. And if that happens, the euro pound's going to come under a lot of pressure as well. I think the euro pound could do one of these. Oh, let's take a real quick dip to 85 pence, you know. But if that happens, you're going to see the euro trade lower as the pound goes through 130. The euro might actually dip down to 111.30. So think about that, for a moment. Just think about the process here. If the euro pound breaks down, pound dollar goes up, euro dollar does one of these. I don't think the euro will implode, but it might trade a little heavier. The euro, dips a little bit. That is a realistic expectation. I'm hoping that doesn't happen because I'm long euro. So that's what I don't want to happen. I'm just saying that that can happen, and I am obviously mentally prepared for it. One of the things as a trader, and I try to explain this to you guys um, on the daily, is I try not to get caught. I try to expect the unexpected and try not to get caught off guard. So this way, mentally, I'm prepared for these things. So if I am long the euro, again, I'm going to reiterate, I'm long the euro. I've got a pretty sizable position. My average is probably 111.20s, and I'm in the euro, and I'm expecting for the euro to run to 113. But that doesn't mean that it's going to go there. I'm aware of that. I know where my stops are at. I also look at it from an intraday basis, thinking, okay, if the euro pound turns lower, the euro could actually, take a little nosedive down to 111.30. I'm mentally prepared for that. So if it does dip to 111.30, I'm not like, what the just happened? I'm well aware of it. I'm well aware of the risk here, and I try to outline that in my head, not because I'm some negative thinker. I don't want to be caught off guard. The one thing that really as a trader will destroy you mentally is if things happen and you weren't expecting it. And there are news events that will happen, and there's nothing you can do about that. Like uh, China U.S. trade deal off, the market goes tits up, and there's nothing you can do about it. You get stopped out of whatever positions you're in, and you're like, shoot, I wasn't expecting that, or maybe you were, but those things happen. But it's the little moves in the market that can happen because of cross rate effects or some news event that that it's coming up and it could affect your current trade a certain way. You have to mentally prepare for it, because if you don't and you're caught off guard, then you're stuck paralyzed. And that's probably the thing that'll kill you the most as a trader, is being paralyzed in the markets. When, like, let's say the euro takes a quick nosedive down to 111.30 and I freeze, and I'm like, oh, 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 and I was sitting here the whole time thinking, oh, I needed to buy the euro or the Aussie dollar if it dropped down to 68.80. But you forget about that trade that you were going to do because you're so paralyzed watching something that you didn't know that was going to happen, right? So then it becomes more opportunity costs. Anyway, just give, I could go on a rant for ages about that kind of stuff, but let's talk about a few other things. So, and then I'm going to bring in Stelios and Steve here in a second. So we got the cable. It's making its way up towards 130. You cannot rule out the idea that the euro could, or the pound can break above 130, because it could grind higher. One of the comments one of our traders in the chat room yesterday was like, Blake, I don't know if we're going to get a blow off top in the market. I'm like, it's like we just continue to grind, and I'm like, well, the blow off tops in the market usually come from grinding. the market, you think about this process for a little bit. I'm gonna move this over like this, and then I'm gonna draw for you. So let me grab a pen, annotate. What happens? Let me grab a pen, mouse, spotlight, eraser, stamp, draw. Oh, here we go. So to get a blow off top in the market or a capitulation, you get this like grinding cessation, right? And then eventually everybody goes, forget it. I can't stay short anymore. They start buying. Then the next person goes, I can't be short. We're spiking up. And then they cover. And then everybody's like, oh my God, my stops are getting triggered. Oh my God. And then, and then that's what happens, right? It starts off with a grind, and then that's what happens, right? So the reason why I explain that, and it goes the other direction too. The reason why I'm talking about this is because I was talking about like possible blow off top in the market, and I'm just hopeful that that happens. We're just continuing to grind higher in the S&P. You might go, oh, we're down today. Well, are we really? I mean, this is all noise. This is all China trade noise. This is grinding higher. That's grinding. I'm hoping that we get one of those boom, boom, one of these. Okay. In the stock market. And that would obviously do wonders for us as far as volatility goes. But I was trying to explain the process of why you get grinding cessations um, into these capitulation moves, short as well. And that's why you take a move like the pound. You think about everybody right now that's short the cable. That's like, oh, they shorted the 130 initially. Yeah, look how shallow the pullback has been. It's been 38% pullback of that. That's of a 38% retracement of that move. Oops, not it's a 20 or of this move. Not even 24% retracement of that move. You know, and a 24% retracement of that move, which is shallow as all get out. So if you're short, you're thinking, well, first of all, you're sweating. Second of all, you might actually be peeing your pants. Third of all, you might have shite in your pants. And now you're thinking, oh my God, I'm going to get stopped out, because that's the mentality that goes through somebody's mind when the pullbacks are so shallow and you're short. You get, you know, um, run over like a freight train. So that's why I guess I just want to talk that these spikes can be very realistic, that we might see in the cable, because we're just grinding higher. We're just grinding. Think about if you're short, you're watching every tick, sweat's beating off your forehead as it ticks higher. If you're short from here, you're just like, oh my God, I'm gonna get run over. Yeah, you probably are. Okay. Anyway, all right. Uh, Aussie, damn it, man, that's a hell of a bounce in the Aussie. That just boop, boop. Okay. Look at the Kiwi stout. That's a What the hell happened there? Did I miss that? What happened? They like raise rates while I wasn't looking, while I was just yammering about. Dollar Canadian. Should talk a little bit about that too. Yesterday, everybody was all excited about the Bank of Canada dovishness. Yeah, that's all, fine and dandy. I got that. Takis from Athens. He nailed this thing at like 132 yesterday, 132 and change. I saw him do it, and I was like, I need to short that, but that was too focused on the euro dollar. So there we go with opportunity cost. We tagged the underside of that triangle. Look, if stocks continue to grind higher, this thing is just going to move lower. I'm surprised that the dollar Canadian didn't go higher than it was. I had an order to sell dollar Canadian at 132 overnight. I already canceled it, but I wanted to sell some if we came back up towards the big figure, because I was hoping just to trade the underside of this triangle again. But I'm surprised that it hadn't even bounced with the risk off that we saw overnight. If this market grinds to new highs, the dollar Canadian is probably going to trade back here to the 131 level. It's plain and simple. Dollar Mexican peso, big failure at 1920 yesterday. And we had a gravestone doji yesterday. So I would not want to be long this. I know you're like, well, it's up right now. Yeah, but I don't know. By the end of the day, we probably won't be. That's a really negative daily candle. And I'm not trading it. I'm just saying. And I guess, dollar yen, I don't know what to do with it here. Although that it looks like we're still building this inverted head and shoulder pattern. That thing could build for another, week. But we have a little pullback. We're below the 38% retracement. Maybe it takes us down the 50% retracement, take the stops below 108, possibly. God, look at this pound. It just continues to grind higher. Anyway, all right, that's my take. We have PCE coming out here shortly, but Stelios and Steve should be here. Hey, guys.
Hey, Blake.
Good morning. Hello.
Hey, good morning, gents. Sorry, I just rambling on because I did not sleep much last night. I was putting some finishing touches together for my costume last night. I was at Home Depot at like 9 o'clock last night. Then I came home and I had to join in the pumpkin carving contest at my house. It wasn't really a contest. It was just our family, the four of us, and a couple of the neighbor kids came over and we were carving up pumpkins. So it was like 10:30 by the time I went to bed. I got up at 2:55. So
You're nuts.
So yeah, I've got like 4 some hours of sleep, and so now I'm just rambling about stuff. Anyway,
So what's the costume? Cinderella. Yeah, that's gonna be.
Yes, I am. Yes. I cannot wait to be Cinderella tonight. That's it. Actually, what I'm so excited about doing is eating a bunch of candy. That's the best part about Halloween is I steal all my kids' almond joys because they don't like them and I take them. So, and I know you guys don't know what an almond joy is, but do you?
I know what an almond is, but I have no idea what an almond
it's
joy
like
is.
this chocolate it's coconut filled and it's got an almond in it, and it's like one almond it's surrounded by like this sweet coconut filling, and then it's got chocolate around the outside. And you either love it or you hate it. It's like black licorice, you either love it or hate it. And I love almond joys. Kids hate it. This is great for me for Halloween. I get all the almond joys. I probably get like 10 little miniature candy bars by the end of the Halloween. It's great. Put on about 3 pounds and call it a day. So, hey, we have PCE coming out here in like less than 2 minutes, so we should probably monitor that. Steve, it's nice to have you back.
It's nice to be back in your company.
Let me see here. Let me open the data flash. There it is. And actually, let me move that out of the way. I'm sitting in my euro and I'm not getting out. So, and I doubt if inflation data comes in a little weaker, obviously that could,
that could hurt it somewhat.
The Fed's been worried about, PCE and just inflation data in general. So
the Fed has been moving.
It's their favorite metric, remember?
Yes. And it's and they always like to spice it up since they've been for more than a decade they've been moving the goalpost with inflation, and trust me, when they manage to get that target, they're going to have to set another one.
So let's see we'll see what comes out here. Now, for those of you that don't know, Data Flash, this comes with, even if you have the Forex Analytics Lite version, the $19 a month version, you still get the Data Flash included with your subscription, but it's an addition that Steve brought to the table. It was a really, really welcome addition. But this is Bloomberg. If you guys want to know how I get my data, it's right here. Just because I pay for Bloomberg, so I use it. Obviously, when you pay $2,800 for something, you tend to use it a month.
And keep in mind that if you wanted to get Data Flash as an individual, you would have to literally pay half the price you pay for Lite version.
Yeah, so
just to get that.
Yeah, so it's great. You guys, you'll see how fast this is, and this is Bloomberg. So data is coming out, and here we go. Nothing.
Oh, that's disappointing.
It is. Yeah, personal income was revised higher.
Canadian GDP is actually 0.1 worse, but that's really all.
And that's there goes the U.S. dollar Canadian back up towards 132 maybe, but really no movement here in FX. That sucks. Yeah, we're gonna have to wait till for report NFP tomorrow. But yeah, I'm sure you guys have a lot of comments based on what happened yesterday. So I'm going to leave you to it. I just want to, before I go, I just want to say that if you guys haven't visited our webinar sponsor, and you're just please do that at least, because Forest Park FX, they will help you find a broker that best suits your needs. They're very much in line with you because they just want you to succeed. The more you succeed, the better off they do. And finding a good broker for you is what they do professionally. And they'll help you with a reimbursement program so you might be able to get Forex Analytics for free based on your trading. And if you're in the US and not anywhere else, and you can't get involved in the reimbursement program, you can get in a cashback rebate program, which if you're trading, you might as well. Since Steve gets Forex Analytics for free,
I do get the rebates, yes.
He gets the rebates. I don't, because
and I get to cry for the many years that I had been trading without getting rebates
that you didn't do it. Yeah. So and I'm not, because I trade with an institutional platform, so it just doesn't, I don't qualify. But I tell you what, if I was trading on a retail platform and I wanted to get rebates, I didn't get rebates, I'd be crying too. So anyway, talk to Forest Park FX. Do yourself a favor, and I'm going to turn it over to you guys. Have a great one, everybody.
Thank
See you tomorrow.
Bye-bye,
okay,
for NFP. Bye. All right, bye.
So my brief comment on what happened yesterday. So Blake, actually, you weren't there on the webinar, but Blake asked me, do I think about the Fed meeting? And I said, look, the past few meetings, Jerome Powell has been always a little bit on the hawkish side, so it's most likely he continues to do that. Having said that, he usually is a little bit hawkish. Then the market goes ahead of him and starts pricing cuts, and the Fed responds. So that's how it's been going.
Always. I mean, when was the last time you remember the Fed actually doing something different than the market was pricing in? I mean, the market can drag the Fed do whatever they want.
In the crisis of 2008, they cut more than expected quite a couple of times. But still, that was
11 years ago.
extraordinary events. I remember that. So that's what I said would happen. We got a slightly more hawkish Powell. He basically indicated that this is done in terms of cuts. Now, without looking,
is he willing to place a bet about that? Because I would be up for that. I would take the other side of the market on that.
Without looking, what do you think the market's pricing in terms of rate moves until let's say 12 months from now?
I think one rate cut for next year.
Yes, one rate cut is exactly what it's pricing, and I think that's quite fair. And if you ask me to call the over or the under, I think one is done for sure. So I think chances are for them to do more than one, but obviously we'll have to see what happens with data and all that. But it's exactly what happened. And also we saw the reaction. We saw, just like Blake said, was that the dollar strengthened a little bit and then it just went lower. So that shows that this path of least resistance is still on the upside for euro dollar, for cable, for the dollar pairs, and we are seeing it continue today. So what's going to happen? The next meetings, we don't know yet, but I think that.
I don't know if you spoke about it yesterday, but what do you think are the balances now with the upcoming elections on December the 12th?
Oh, the UK, you mean?
Yes.
Well, we talked about it yesterday, and I said that this is actually. Let me go a step back. What happened now with the elections coming up cannot make me be bearish sterling,
same here.
And this is the reason. One of the reasons is that the UK people actually have a chance to effectively have a second referendum, because you have two parties, the Conservatives and the Brexit Party, who are against, who want to get out of the EU, and you have Labour and the Lib Dems, who have actually said explicitly, we think it's better to be in the European Union. And I just saw a poll. I don't know how accurate these are, but the poll from the Evening Standard, I think, that came in a few hours ago, and it showed that Conservatives plus Brexit are at 51%, and Labour plus Lib Dems are at 44 or 45. So it's pretty close. And this gap can definitely shift quite a bit going into the elections. So at the moment, we have been given an extra option, which is the no Brexit at all, because if people vote for Labour and
Yeah,
Liberal
in essence, if they really don't want a Brexit, I mean, for
Yeah.
this election, they can choose to go, you know, to
Yeah.
one of the parties that say, you know, that, yeah,
Yeah,
exactly.
I would be much more bullish sterling on the back of that if it wasn't for Jeremy Corbyn, who is, you know, in my opinion and quite a few people's opinion, totally unelectable. And I think that if they had somebody like Miliband or whoever else in charge of Labour, Labour would be up there with the Conservatives and not 15 points below. So that's the only stumbling block, because Corbyn, in my opinion, is very, I don't like him in the, what he's trying to push in terms of agenda. So, but anyway, I still think this is all quite bullish for the pound going into it. The no deal Brexit scenario is slowly going away. It's not obviously not a 0% event. Of course, it's got some possibility, but it's lower. So I don't see why we can't just grind higher into the elections in terms of sterling.
Yeah, and we kept warning weeks and weeks ago, and I remember that even before I left, for this short vacation, we were saying the same thing, that keep in mind, we might see a corrective move lower, and we were in that phase.
Yes.
But 128 might produce support, and if 128 doesn't do the trick, worst case scenario, we might come back, retest that broken wedge at 126, 126.50, and then shoot higher from there. And the fact that 128, which was the first area of support, proved to be sufficient.
Yeah.
And we seem to have broken above this bull flag, which points to new highs. I think it's a very, very bullish signal. And I think that people that, want to keep ignoring the signs here are going to be in a lot of pain. And I really hope that, there are no people here that are listening that don't take this or haven't taken these warnings, as seriously as they should.
Yeah, like Blake said, this pullback has been very shallow, and that says a lot. So,
absolutely. And having to do, I didn't want to interrupt Blake before, having to do with the euro pound, which seems to be turning lower once again. At least, it's in a horizontal consolidation that usually points to a continuation. I have to say that there's no wonder there, because if you remember, we had a target, and the target is the implied target from this from this bear flag that we have here, and that points to 84.80. And coincidentally or not, this is the exact same area where we found lows back here. And if you zoom out, you'll see that it was an area that produced support and resistance multiple times further back in the past. So this looks to me like a triangle that should break in the direction of the trend and should lead towards 84.80 as the next area of support. So I'm in total agreement with that. I mean, euro pound looks very heavy to me, and this price action looks clearly as continuation. Also, just by looking, the RSI profile and how tepid the rebound was in the RSI as well, just to work out oversold conditions. That also tells me that the exact same story, that more likely than not, I would expect a continuation lower. Now, a few more pairs that I want to focus. I was focused before I even left. One of them is USD Swiss. You can see, depends on how you want to draw these lines here. But if you focus only on the purple ones, this rebound higher, had clearly corrected characteristics. We broke down, we rebounded, but as you see, we didn't even manage to retest that broken triangles support as resistance, because the 200 daily moving average got the job done. And we're pushing lower once again. I do think that the next time we retest this 98.40 confluence of supports here, might not provide support anymore, and we might just slash through it. So I do think that the USD Swiss looks quite appealing to the downside, exactly as the Euro USD looks appealing to the upside. Triple confluence of resistances currently passing from 112. Triple confluence of resistances. The 200 daily moving average, the 61.8% fib of this last move lower, and this trend line resistance, you can see it here, So 112 definitely a key level above which I think we might be finally opening up a lot more upside. Now, another highly correlated pair with the USD Swiss, and of course highly invertedly correlated with the Euro USD, is the USD SEK, which tells us quite a similar story here. In fact, I'm very much paying attention to two levels here. One of them is this ascending trend line support. As you see, every single day, of course, it keeps moving higher. Currently passing, let's say, from 956, but most importantly, below that, we have a confluence of supports at 948, the 200 daily moving average, and this horizontal support area. I do think that if the USD Swiss also breaks through that, then we're going to have to consider this as a big bearish event. And obviously, if that's what is going to be happening with the USD SEK, at the same time the USD Swiss is going to be pushing lower, at the same time the Euro USD is going to be pushing higher, and you get the whole story. Now, having to do with yesterday, I was very busy because it was my first day back at work, so I managed quite a lot of stuff outside of trading. But the only thing that I had the time, in essence, to jump on the webinar on the chat room to speak about was, this is the daily, but I think we should go on the 4-hour chart, is to show this chart before we actually broke down from this flag, saying that, whoop, this is a bear flag, and this looks to me like seems like the end of the correction, and we might be moving lower from here. And big minds thing I like, although Blake obviously is a lot more experienced and has been in the market for a lot longer. But yesterday night, my time, I told Blake, if you want me, I can do the chart of the day. And he's like, no, I just did it. And I'm like, oh, which one did you do? And he was like, I did the DXY. And I was like, oh, I would have done the DXY as well. So the fact that we both were looking for the same chart as the chart of the day is also not a coincidence, because I do think that this is also here a technical event. This looks to me like a completed corrective move. Very nice reversal yesterday after first moving to new highs in this rebound, and then we reversed lower. You can see this 4-hour candlestick. It's like a long shooting star, and from that point on we continued lower. We also bridged this flags trend line support, and we're now about to retest the previous lows. And in my opinion, it is extremely likely that we're going to be moving lower from here. So now that we've said that, let's go to the daily and see what that means. Because what that means is that we should now be moving towards the next objective, which is the trend line support of these blue ascending channels. From this blue ascending channel. So this currently passes from, let's say, 96.75. And I do think that the move lower from there is going to be another signal that something bigger is happening here. I mean, we caught the reversal in the DXY quite early. For myself, it was a decent enough signal once we broke down from this intermittent ascending trend line. I still hold that's when I took a short. I still hold 2/3 of that short position, because I took 1/3 off at 97.70 when we reached it. And I think we might be looking at a much bigger move lower here in the dollar. But as I said, 96.75 definitely the next area of support to pay attention to. Quite an important one. Now, at the same time yesterday, we had the S&P stall at a very important area. And why is that an important area? I had this drawn on my charts, weeks and weeks ago, because potentially this is an ascending wedge. It's definitely a triangle of some kind. as I was saying some time ago, it is not a steep enough wedge to give you the confidence that it is a terminal formation. The fact that it's not that steep makes it likely that we might even see a bullish breakout in this case. But in any case, we're currently on a resistance. So, the S&P and, since it's a proxy for risk, the rest of the risk assets have to take a decision here on, what is about to happen. So new highs, yes, but we're also at resistance. And that is something, very important to consider. It wouldn't also be a bad idea, now that I think about it, to fib extend this latest, there we go, in case we move higher, to fib extend the latest corrective move lower to see, to look for potential targets. The 161.8% fib comes at 3,125. So in a case of a bullish breakout, probably that would be the first significant area I would be looking for resistance. Okay. Now, let me go through the questions. Oh, I didn't cover the WTI, but I'm going to do so, and I would do so anyhow, because WTI is also at a very important juncture. I'm going to show you what the case is. Another question about Dale. Dale is absolutely fine. He just had something he needed to attend, and of course, since we're quite a big team, there was absolutely no problem for him to take a day off. So he's going to be back with us tomorrow. He's 100% healthy and good. Let's start from the WTI and then move to metals, because we also have a question about the metals. So let's start from the WTI. So WTI, moment of truth here, right? I mean, so far, you can make a very good case that this rebound higher was purely corrective. And as you see, I haven't changed anything in my drawings. Last time I drew something up here was that if we break above this 54.65 area, we might extend higher towards that confluence, because as you see, this is a triple confluence. We got rejected from almost reaching a triple confluence of resistances, 50% fib, this ascending channels resistance, and the 200 daily moving average was also in the area. And now we are retesting this channels support. So it's, in my opinion, it's quite easy to say that this is a significant area, and if we do break lower from here, we should be headed back to 50.5, 51, where we found multiple times so far support. Okay. So that's what I think about crude. So basically, if you really like crude to the upside, this is where you buy it, and you place quite a tight stop loss. But if we do get a daily close below this channel, I would be very careful if I was you, because I think we're going to be on our way to 50.5. Now, also significant area here for gold, and you can see why, because gold is threatening once again. It did that last week. I was still here before I left. We had like a bullish day up to a point. It was looking like gold would break out from this pennant, but then we gave back all the gains by the end of the day. We closed unchanged and within this pennant. Now we're seeing another attempt to break out from this pennant, and if we do close on the daily above it, I think that's a rather decent sign that another leg lower might have begun in that case. Now, silver, oppositely from what we saw here in gold, had already made a decisive move above the equivalent pennant. So in essence, silver didn't actually produce like a few days ago like a false breakout, and now it's attempting again. It has broken higher. It's still trading higher. We haven't just seen yet the acceleration phase of the upside. But I have to tell you that I'm absolutely very positive, very bullish, both the metals. And of course, you have no reason not to be bullish another metal here, which is palladium. I mean, we talked early on about palladium, and that this is a textbook cup and handle formation. Cup and handle formations are continuation patterns, and technical patterns are not voodoo, are not magic, are not some type of unexplained phenomena. It's simply a depiction of what happens with demand and supply. So the fact, for example, that the cup and handle formation has this form is not by accident, because what happens in a cup and handle formation, and that is why it's considered a continuation pattern, is that you find high when you have an established trend, check, in both of those. I mean, we had an established trend, we found a high. Then you see a move lower, check. Then you get a very nice recovery and you retest the previous high, check. Then the bears have another attempt to push price lower, check. Then they fail earlier and at higher prices than they did previously, which means that demand is actually increasing. So the fact that then you create a higher low is an indication that demand is increasing in comparison to supply. That demand, people express demand at higher prices, which shows that they're more eager to buy than sellers are eager to sell. And then you go back to the previous two highs, and when you manage to actually break above it, then people that were bearish completely give up, and you have a very healthy continuation of the trend. And that's exactly what we got here. Now, since the very beginning, I said that if we do break out from here, we have two targets to watch. One of them is the 61.8% fib extension from this corrective move lower, which, as you see, both yesterday and today, we almost targeted. I mean, we stopped like, I don't know, like $3 away from it, which, $3 at 1,826 is like nothing, percentage-wise. So far, we seem to be stalling temporarily in that level. But don't forget that there is also the target from the cup and handle formation, which points towards 1940. So, in order for us to complete the cup and handle formation, we still have, a decent way to move. I mean, we might see another $140 move higher from where we currently are. So I wouldn't be, trying to fight the trend yet, especially since, as you see, we still remain within this tight and very well-defined ascending channel. Okay, we are seeing signs of RSI divergence. That's more than obvious on the daily, but keep in mind that that can also end up, lasting for several days. On occasion, it can even last for several weeks. So, is it due for some type of a pullback? Yes, it definitely is. Would I be selling here? Close my eyes and sell here? No, I wouldn't. Now, if you want to trade on a shorter term time frame, might be worth taking a shot once we breach this ascending channels trend line support. Otherwise, I would be very careful. And one more I wanted to show is copper. You can make the argument that copper has had a bullish break, if you want to see this as a descending wedge. In any case, though, this 270 something is also an important zone, and we haven't really been trending, so I would be a lot more careful. But we haven't had a look at copper for quite some time, so I wanted us to visit that as well. Let's see. My pleasure. Platinum. Is platinum in a daily cup and handle? Let's see. So here is platinum. And you are asking if this is a cup and handle formation. Definitely no. I mean, no, this isn't a cup and handle formation, but I can tell you one thing for sure. You don't need cup and handle formation to have a bullish trigger, because things with platinum are quite simple here. We have this trend line that dates back to August 2011. As you see, we made a false break, like, we were trading like 24 hours above it or something like that in total, like a little bit more than 24 hours above it. That proved to be a false break. Then we retested it a couple of times. We failed every single time. We're now attempting to attack the same trend line once again. So, if you really want to be looking higher, for platinum, I think that this is what you should be paying attention to, this trend line, which isn't far away, right? So, yes, platinum can definitely prove that this was some type of a bottom, right? Some type of a rounded bottom or whatever. But we don't have confirmation yet. We're not far away, though, from it. I have to tell you, though, that I would first, before I chased after platinum, I would have a look at the gold platinum ratio, silver platinum ratio, etc. Because in general, platinum, with the exception of a short period somewhere here, has been for years underperforming what gold and silver have been doing. Now, of course, if we end up making this bullish breakout, perhaps this can change. But what I'm trying to say is that so far as we're concerned, recent history shows that you would be better off by buying gold or silver than holding platinum. By the way, one more comment I wanted to make about gold, which I forgot to do before, is that gold is also testing at the same time that it is attempting to break above this pennant, is also testing this trend line resistance in the RSI. So another thing to notice here, that the RSI is also showing that we might be in the precipice of a bullish breakout. And keep in mind, we're currently at 56. So if we break out from here and we head to new highs, RSI can easily move back again to 80, 75. So that should translate to a very decent move in price, right? So any way I look at it, I think that gold looks very, very interesting here, and I do think that it is extremely likely that it is beginning another move higher. We're going to know within the next few days. There's no question about it, and very likely we're going to know tomorrow, right? Tomorrow we have NFP. If NFP fails to impress, expectations are very low. 85,000 in comparison to recent history is a very, very low number. So it's a number that market participants should think that we should easily achieve. Now imagine if we get like half of that, right? I do think that the market is going to aggressively sell the dollar in that case. Please, can you cover US Treasuries and bonds? Yes, I can. Are we heading to 195 and minus 0.2, or have we put in a high? Okay, we're going to do that. Let me go through other questions. Is there a bullish wedge on, if you go back to August? Yes, it can prove to be bullish. We're going to find out quite soon. Can you please cover the DAX? Yes, I can do that as well. We covered this, we covered that. Euro yen also. Okay, let's take them one by one. So let's finish up with the questions on FX. So Euro yen, there it is. So what would trouble me here in Euro yen is the fact that we keep stumbling on this channel's trend line resistance. So, that would make me very careful, because this can prove to be a corrective move higher, which, ends and then boom, we move lower. That's one scenario. Now, another scenario is that, you know, we continue higher and we actually accelerate. Now, the important level for me, you know, in order for me to actually start thinking that there is a lot more upside here for the euro yen, is 123. So if we do see a breakout from 123, I do think that euro yen is going to be, you know, moving a lot higher. Now, having to do with support, 120 is important support. Previous high here, as you see, previous low there, previous high there. And it's also a round number, so a psychological number. So bottom line above 120, it makes sense if you want to, you know, maintain a bullish bias. It does make sense. Above 123, I would definitely start looking, you know, for much higher levels. Until that happens, as I said, this ascending channel and the fact that, you know, price keeps getting rejected from it, you know, makes me a lot less enthusiastic about its potential to move higher. So, you know, that's my outlook on that. Now, the other question was about the DAX and having to do with the DAX. There it is. You know, remains very well bid. This is what I drew several days ago. I was looking at this symmetrical triangle. You can see it here with purple. And now I was expecting that if we do break above the symmetrical triangle, we're going to have a continuation, and that has proved to be the case. And even these last 3 days, you know, so that, you know, the DAX remains very well bid. So next target is roughly at 13,200. So I do think that it looks quite healthy for a continuation higher. It looks, you know, it looks well bid. I mean, just look at yesterday's candle. Yesterday we were moving quite a lot lower at some point, and we closed unchanged on the day. Today the same deal so far. I mean, we were moving lower, and now we've pared back most of the losses. Price action looks quite constructive. Okay. Now we had the question about the bonds. Yep, bonds and treasuries. So let's start from the treasuries. And here are the treasuries. So treasuries found support at quite an important level. You can see it here. First of all, we have this ascending channel. We had this horizontal support resistance area. So we found support on this support area just above this channel. In order for me to be looking for higher yields, so lower prices, I want to see a breakdown from here. So I want to see a daily close below this trend line. Now, as long as we're not closing below this trend line, I think that you need to respect the fact that, you know, the medium-term trend is higher. Of course, it is easy to acknowledge here that momentum has waned. I mean, we've literally stalled and, you know, are oscillating in this larger range. But, you know, we still have a series of higher lows that date back to October, last October. So it's a 1 year uptrend so far with a series of higher lows. So, you know, you want to see higher yields here, you know, wait for a breakdown here. And here is the yield chart as well. You know, as you see, this type of price action, this rebound higher, doesn't look impulsive in any way. Okay, so I wouldn't be surprised to see lower yields from here, as long as that trend line in the bond price is actually holding. And now, having to do with the bonds, you know, there is a very bearish case scenario here, in the, you know, very bearish. I mean, yeah, we can move quite a lot lower. And this is if this ugly head and shoulders formation is the real deal. Now, you know, it's not a beautiful one, there's no question about it, but it's still a head and shoulders formation. So the neckline, as you see, is inclined, currently passing from like 170 to 65. We seem to be consolidating. So, you know, I want to see what happens from there. But we remain, you know, in this let's say that it's a corrective move lower, it's likely a corrective move lower because, don't forget the big picture. The big picture is that this is what we got after breaking higher from a multi-year corrective pattern. I kept saying, week in, week out, that this was a corrective pattern in the bunds. And, we now, in retrospect, know that this was exactly the case here, right? And we can still move lower and complete this head and shoulders formation pattern and still remain in a larger uptrend. Now, the fact that you see this divergence between the move that we've seen in the bunds and the one we've seen in the treasuries also explains why the Euro USD has been decently bid lately. And as you understand, if the bunds want to really continue and complete this head and shoulders formation, of course, it depends on what the treasuries are going to do, but it is very likely that the bunds will, continue underperforming the treasuries. So bund yields will, will be moving higher, perhaps, at a faster pace, in which case we should still see the Euro USD perform quite nicely. I don't have the yields chart on the bunds, but it's inverted. So what the bunds are doing, the yields are doing the exactly opposite thing. I mean, it's an inverse relationship, as you know. So either examining one or the other, it's the same deal. You just have to flip one, upside down, and in essence, you get a very, very accurate depiction of the yield curve, more or less. Let me see if I missed any questions, and if I didn't, then we're gonna call it a day and be back here tomorrow. Gold and silver, we did that. Okay, so nice to be back. Nice to see you all here. Thank you for listening in, and we'll be back tomorrow, and Dale is also going to be back tomorrow with us. So thank you very much. Dale would say, don't just count your pips, count your blessings as well. So it's a good way to remember of Dale. So see you all tomorrow.